you'll see gold move higher and higher and higher, and then silver will be dragged along with it reluctantly. And then all of a sudden, the public wakes up, and the public, they're not banks, right? And they can't afford gold because by then gold is too expensive. So they say, you know what? I can't deal with these dollars anymore. They're dying, and I keep and they're not maintaining their purchasing power. I got to get something that maintains purchasing power. So they buy anything.
Wow.
But the first thing that they want is silver because that's the thing that is the most liquid in that environment. So that's really what I'm waiting for, the 15-to-1 ratio when the public realizes that this isn't working anymore and I got to get something to hold my purchasing power. Otherwise, I'm going to lose everything.
Gold withdrawals from the Shanghai Gold Exchange saw a notable rebound in September, rising by 13% month on month to 115 tons. This increase aligns with seasonal trends, as retailers replenish their inventories in preparation for the anticipated boost in sales during China's early October National Day holiday. This reflects a broader trend in the precious metals market, where demand for gold and silver surges during periods of heightened economic activity or uncertainty. Rafi Farber, a financial analyst specializing in gold and silver markets, explains that during economic distress, gold prices rise first because banks typically hold gold as a reserve asset. Due to its relative affordability, silver emerges as the public's preferred alternative when gold becomes too expensive. In 2020, people flocked to gold and silver amid global uncertainty caused by COVID-19 lockdowns. While gold demand soared, silver remained more accessible to everyday investors. The behavior of central banks also plays a critical role in influencing gold prices. Data from the World Gold Council shows that central banks' net gold purchases increased by 6% year-on-year in the second quarter of this year, reaching 184 tons. Central banks rely heavily on gold to diversify their reserves, but silver, unlike gold, does not enjoy the same institutional demand. While some discussions, such as Russia's consideration of adding non-gold precious metals to its non-central bank holdings, have emerged, silver's price volatility has deterred many central banks from using it as a reserve asset. Silver has performed strongly, with its price rising by 35% since the LBMA conference in October 2024. Many investors see silver as undervalued compared to gold, making it an attractive asset. Silver is increasingly considered a cost-effective alternative and a strategic long-term investment amid economic uncertainty. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I can assume that other people will agree to around that price to the exchange value, something liquid in
Right.
that area, right? So that's why people use silver as money. The reason that we don't use it directly is because something came in the middle of it, and that's called a dollar. And then banks took the silver, gave us the dollars, and we ended up trading the derivatives of it. But the thing is, what makes silver move from 5 to 50 in a matter of months is that those derivatives are no longer trusted. And people say this not academically. It's not. This is not how the thought process goes. They don't say, "Well, I don't think that my dollar derivatives are going to buy silver anymore. Therefore, I'm not going to use the silver." It's just it's an instinct that when the derivative dies, the public will not go to gold. Right
Right.
before silver goes to the moonshot or whatever it's going to be, let's say whatever the dollar amount is, it's going to be a 15-to-1 ratio. Before that happens, you
Hmm.
start seeing the banks worry, and the banks don't stack silver. They don't have the room for it. There's no reason for them to do it. They stack gold. Banks stack gold,
Right.
right? So you'll see gold move higher and higher and higher, and then silver will be dragged along with it reluctantly. And then all of a sudden, the public wakes up, and the public, they're not banks, right? And they can't afford gold because by then gold is too expensive. So they say, you know what? I can't deal with these dollars anymore. They're dying, and I keep and they're not maintaining their purchasing power. I got to get something that maintains purchasing power. So they buy anything.
Wow.
But the first thing that they want is silver because that's the thing that is the most liquid in that environment. So that's really what I'm waiting for, the 15-to-1 ratio when the public realizes that this isn't working anymore and I got to get something to hold my purchasing power. Otherwise, I'm going to lose everything. Well, we saw what happened briefly in 2020, right? There was these lockdowns, and our genius politicians decided to save the world with their bravery and amazingness, and we thank them so much for their wisdom. Stop the economy, and people were freaking out, and people ran to gold and to silver.
Right.
And
You couldn't order it either.
What?
You couldn't
Yeah,
order it too, I remember, for a while.
you couldn't, but what you could do is you could lock in a price, and then a month or two later, it would be delivered. Because
Oh.
we knew that these genius lockdowns, they would solve everything very quickly, and then everything would go back to normal. When we're talking about Iran bombing the oil ports of its neighbors and its other Arab countries, then we're talking about something different, and a Franz Ferdinand moment where we're going into. I don't think the dollar can withstand. So you could enter a world where the dollar is just not going to work, and you're going to have to trade silver coins or gold coins for what you need. And again, I'm not saying this is necessarily going to happen in the next few weeks. I'm saying
Right.
in the world that we are in, it's plausible enough that you want your stacks with you in case this happens, because you won't be able to get them after something like that happens.
Rafi Farber explains that when people lose faith in the dollar's ability to maintain purchasing power, they often turn to silver as a reliable store of value. This sentiment has been reflected in the recent bullish activity in the silver market, which continues to eye the $32.50 level as both a target and a potential barrier. As of early Wednesday, silver prices remained volatile, with the market showing signs of strength and caution. If silver can break above the $32.50 level on a daily close, it could signal a strong upward movement, potentially reaching the $35 level in the longer term. However, given the current market conditions, a short-term pullback seems likely. Such a dip would allow investors to buy silver at lower prices, attracting those looking to capitalize on cheaper ounces. This dynamic reflects Farber's broader analysis, where silver becomes the public's alternative to gold in times of economic uncertainty. With ongoing concerns about the dollar's stability, the silver market remains noisy and potentially lucrative, offering investors a chance to hedge against inflation and currency devaluation.
What happens for silver as an industrial commodity, I couldn't care less. I mean, I care a little bit because
Right.
I own silver and it's in my account, and like I like when the price goes up. And obviously, if there's higher industrial demand, then there's a bigger dollar number in my brokerage account, and I can imagine that I can afford more things, and it makes me feel better. But really, it's all nothing. It's like you don't need to, it doesn't really matter to me that much. And the reason why is that, look, when you picture industrial silver demand, and I don't deny that silver is an industrial commodity, but what I am following, and the reason why silver goes from, let's say, what was it, $6 in 1978 to $50 in 1980, right? It's
Right.
not suddenly that industrial demand for silver just picked up, right?
Yeah, yeah, that's
That was
true.
that had nothing, that had almost nothing to do with it. It had something to do with it, maybe like 2-3%. And the reason that silver goes from what was it, $10 in 2008 to or was it even less, to $50 in 2011, also not industrial demand, not at all.
Right.
It's what it is that it's hard for people to even understand it, because nobody goes around with silver coins anymore and trades them for stuff, because we use dollars.
Right.
But what causes silver to do that is a sudden lack of confidence that dollars work anymore. And what do I mean by that? Well, the reason that a dollar works, it's not, and this is one of the main things that I try to dispel on my channel. Money is not like a spontaneous agreement between people to use XYZ as a money, and they sign a contract, or they're in a big stadium and they say, oh, we're going to use this and it's going to be money, and then we're going to be able to trade. It never happened. There's no such thing as spontaneous agreement or mass agreement between people. Only
Right.
two people can agree on something at one time, right? It just happens to be that more people agree around to what the exchange value for a money is, because the commodity happens to be more liquid than other commodities. What's a new digital dollar going to be based on? It's going to be based on the
On
old
debt.
dollar,
Yeah.
because you have to
Yeah.
you have to base the new price array on the previous price array. It's like for example, when you have a hyperinflating currency and they lop off 6 zeros, or whatever third world country it is, and they say, oh, this is the new Zimbabwe dollar. Well, it just hyperinflates again, because it's qualitatively, economically speaking, the same thing.
Right.
So a digital dollar, a CBDC dollar, would be the same thing as today's digital dollar, would just be more trackable. So why would people accept that?
Yeah.
It's
Yeah, you're right.
the question is, will they try? Yeah, they'll try. Will it stabilize anything? No,
No.
because when you have a collapsing tower, building another floor on top of it is not going to stabilize it.
Investors closely watch for fundamental price movements as gold and silver markets respond to economic trends and uncertainty. Gold remains the go-to asset for central banks, while silver, with its affordability, draws attention from individual investors seeking alternatives. Silver potentially breaking key resistance levels could offer significant opportunities in the months ahead, especially for those looking to hedge against inflation and currency risks. How will the current economic landscape influence gold and silver prices in the coming months? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.